guys, this is a very casual video where we will be discussing about diversification of portfolio. So what does diversification means? In simple layman terms, it means don't put all your eggs in one basket. Okay, so it can be done by diversify your investment into different asset classes, in different countries, or in different sectors. So there are two parts of this video. The first part is sharing on the current assets that we have invested in, and the second part is to compare the difference between the actual and expected return. Okay. So let's start with a big why question. So the famous investor Warren Buffett once say that he is against diversification because he say diversification is a protection from ignorance. So personally, do you agree with him?
Personally, I agree because when investors don't do their due diligence, or they find out more about the companies themselves that they want to invest in, it's better just to diversify. Like what Warren say, just buy the S&P 500 index fund or buy a broad market index fund, which is like very diversified. So this will protect you against a risk that when you buy certain things that you don't know, like certain stocks that you don't know about or don't know what their revenue is or their profits are, and you don't know the company, right? So that's why you should diversify. Does that answer my question?
I mean, there is no correct or wrong answer to diversification. The why Warren Buffett say that is because he know what he's doing. He know which stock he's picking, because he don't just gamble into the stock. But for people who don't do their due diligence or who do not look into the company performance, it's better to diversify. So one of the way is to invest in the index funds, because they have 500 companies, so it's like the risks are spread across so different industry and companies. It's safer. Okay, so back to the first part of the sharing session is that what are the assets that you have invested in before, and why did you start that?
Okay, personally, I only really started investing after I start working. So that's when I have extra income. Like after I pay all my expenses, I still have some savings left. I was particularly interested in cryptocurrency at that point of time. It's August 2017. Okay, just got my job in July, got my first paycheck. At that point of time, I feel like cryptocurrency is something new, something that is very interesting at that point in time. A lot of speculation happening in that area where you have influencers talking about Bitcoin.
Wait, you say you must have enough emergency funds, so that time you already have?
Yeah, so at that point in time, I don't really have enough, but I did use this extra income to speculate using crypto. So that's the point of time where I can say I'm still a baby in investing. So it's my first 2 months, and yeah, that's where I put my money in speculative assets.
Meaning you expecting to get
a high return, yeah, very high return. Bitcoin going up and up at that point in time very fast, right? So yeah, so that's when I also started putting my money into mutual funds. It's called ASB. So as Malaysian Bumiputras, we are taught that if you're going to put some money, you just put it into ASB, Amanah Saham Bumiputra. So that's where you get about 7% on average returns over like the 20 or 30 years that the fund is there. So it's a very good mutual funds for Bumiputras.
Why did you start to put into this only 7% return?
Yeah, because at that point in time, I see 7% as high. Yeah, because if you compare 7% with like fixed assets like what you call that?
Fixed deposits.
Fixed deposits. Yeah, fixed deposit is quite low. Even in Malaysia, you can get at maximum 4% fixed deposit.
Yeah.
In Singapore, it's 2% at that point of time. Now it's even lower. It's 1%. So yeah, that's why I think that 7% is a good. It's a good call lah.
I think it's not bad. And there's another plus point for investing in Amanah Saham Bumiputra because it is say that it is capital guarantee, meaning when you buy it's 1 ringgit per unit, and when you're selling it is also fixed at 1 ringgit. Is it true?
Yeah. So the asset is always fixed at 1 ringgit per unit. Yeah. So yeah, it's a good.
So I think it's good, like if you invest this in Malaysia, it's like a hedge against the inflation, because the inflation is about 4 to 5% per year.
Yes, for Malaysians it's very good. But I heard last year's is only 3.5%. So it just it's similar to inflation. Yeah.
I think last year is an exceptional year because it's the COVID years where there's economy downturn and interest rate is low in most of the country because the government want to stimulate the economy. So it's just but it has a historical average return of 6 to 7%.
Yes.
Right?
Yeah. Last year I posted a video stating that 2020 is the best time to purchase a property in Malaysia. So I put the money where my mouth is, and I purchased a property in 2020. And I remember it was April 2020. I purchased a condominium unit right in Kuala Lumpur, Malaysia, which is the Ibu Negara. What is that?
Capital.
The capital. Yeah. It's the capital of Malaysia, and yeah, the condominium is very good. It's just in front of IKEA Cheras. If you guys are Malaysians, I think you should know where IKEA Cheras is. And next to IKEA Cheras is My Town, and they have an MRT called Cochrane MRT. Yeah, Cochrane MRT. So it's just one MRT station away from the upcoming TRX exchange.
Okay. I don't need to go so much details. So we know that there is a property that people can invest in, but why people invest in property? Is it for good return or?
I mean, okay, so non-seasoned investor usually they just home buyers lah. Basically, they buy a home for them to live in. Right, that's the main reason, right? Okay, when they live into the home, they're also expecting capital appreciation. So that's when you stay in a home for 10 years, and then you expect a higher return if you sell the home, right? Because the home price goes up over time. So as a property investor, I also expect when you pay off the mortgage, which is the loan that you service when you purchase the home, you have two portions. Okay, one is the I forget already.
Principal.
Yeah. One is the principal, and the second is the interest. So every time you pay this principal, it's actually money going into your own pocket. Yeah, it's just saved by the bank. So basically, when you sell the property, you unlock this principal, and you can get that principal amount lah. So as an investor, I purchase a property. Basically, after purchasing, I'm going to rent it out to a tenant, right? So the tenants are usually going to pay this rental, and then I will take the rental, pay off my mortgage, pay off other expenses like sinking fund, management fees, stuff like that. And that's how I pay off the property over time. And over time, I'm expecting a principal return and also capital appreciation. Yeah, so if I'm lucky where the rental is higher than the mortgage and other expenses, that's positive cash flow also. So these three are what property investors like us expect in a property. Yeah, what it will give us.
Okay. That's interesting to find out the different elements in return that you can get from property. Yeah. I think last year is also a good year to invest in stocks, right?
Yes. Yeah, last year is. I just wish I put my money somewhere else. Yeah. So after purchasing the property in Malaysia, okay, I after paying the like lawyer fees and whatnot when you purchase a property, I have little left to invest into stocks. So I didn't really invest much into stocks, or little to nothing lah. Okay, because I also have a property in Singapore that I have to pay for like renovation costs and whatnot.
Okay.
Yeah, so
Yeah.
someone who is more suitable to talk about stocks because she invested a lot in stocks is you.
Not a lot. Okay. I think it's 1/3. Is it a lot
1/3 meaning?
of liquid assets? So basically,
1/3 mean 10k lah.
yeah.
Or 15K.
I'm going to delete
No,
this
I just
portion. No.
yeah, I just
Secret. Cannot
Why
tell.
secret?
So because
Yeah.
like I also
15,000.
I think it's when you have enough emergency fund, then I'll also start to look for investment opportunity in property. But meanwhile, I finding with the extra liquidity, so I think it's also good to put some in stocks, not only single stock but diversify into different and also in the S&P 500, which is very well diversified. You don't need to study all 500 companies, and surprisingly it has been going up since March last year, and this year is also doing good year to date. But in terms of single stock, yeah, there is up and down. So in short, overall it's still a positive return, but if I would say the more steady return is still come from the very well diversified S&P 500. There is stock that outperform it. For example, Facebook this year, Alibaba did very well last year but not this year, and also Tesla last year, but this year there is a lot of news. So basically nobody know what's going to happen to that company. It very much depend on the news, media news. Yeah, so it's like gamble also lah, right? But I think one of the due diligence that people can do is study the company fundamental, and if you believe in the company future potential, then why not, right? Better than sitting in the saving accounts. Yeah.
Yeah, so I want to ask. I ask for the viewers lah. What stocks do you purchase? Do you buy?
What I already buy? What
Yeah.
on my
Now
watch
lah.
list?
Now in your portfolio.
Already,